Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Weak global cues, royal sentiment on the Lal Street. The Sensex declines over 600 points. The Nifty loses 200 points. All sectoral indices end in the red. The rupee weakens by more than 50 paise, moving closer to the 82 mark against the dollar. After a public backlash and market turbulence, the British government withdraws a proposed tax cut for the super-rich. New Prime Minister Liz Truss makes a U-turn after the IMF said the move will widen inequality. Credit Suisse shares plunge due to capital concerns, even as the CEO's assurance over its balance sheet strength. The bank is reportedly in talks with investors and is also considering asset sales to shore up capital. Credit Suisse shares are down 60% since the start of this year. Process, the parent company of fintech major PayU, scraps the proposed acquisition of BillDesk for $4.7 billion, saying certain conditions were not fulfilled before the September 30th deadline. The deal would have been the second largest in India's internet economy and would have created the country's largest online payments entity. The union government moves to fast-track disinvestment, likely to invite expressions of interest by IDBI Bank by the 15th of October. Sources say 30 entities have shown interest in Hotel Ashok, including hospitality bigwigs like Hyatt, Taj, ITC, Leela, Hilton, among others. That's an exclusive. India may have to cut down on gas consumption if LNG prices see a sharp spike, says Kirit Parikh. The man heading the committee to review the price of gas says fertilizer companies will be prioritized for allocation. Government hiked the prices of natural gas by 40% to a record high on Friday. A 7-year-old boy dies after an e-scooter allegedly explodes while charging in Vasai on the outskirts of Mumbai. The police say the battery was removed from the scooter for overnight charging, resulting in overheating and a short circuit which led to an explosion. Ukraine's President Zelensky says his troops are making more gains in Russian-occupied Kherson. Ukraine is also in full control of Lyman, a key logistics hub in the eastern region after Russian troops retreated. The Customs Department raises the red flag on companies violating the rules of origin norms and importing from China. Sources say some companies importing Chinese goods via Southeast Asian countries are under the scanner. Also accuse some companies of importing finished goods in the garb of raw materials or intermediaries. The Indian Air Force inducts the first made-in-India light combat helicopter, Prachand. The chopper was designed and developed by Hindustan Aeronautics Limited. All of that and more coming up for you, but let's start with the market action today. Weak global sentiment is playing spoil sport as stock markets coming under pressure across the globe. The Sensex today lost over 600 points and the Nifty was down over 200 points. Now, with this decline, all the gains made on Friday stand reversed. The Nifty Bank was the worst hit as financials led the decline, and there was no place to hide as all sectoral indices ended in the red. Anuj joins us now to wrap up the market action. It's a weak start. Anuj, are markets reacting to global cues, and finally, all sectoral indices closing in the red?
Well, the market had a bit of a rout today, the global market that is, and India was part of that. Of course, there's a fear of contagion risk emerging out of what's happening with Credit Suisse. For our market, we were sitting on some heavy gains from Friday. So in any case, the market looked a bit on the heavy side. Banks are high beta now. They led the rally on Friday and they led the decline today. So names like SBI, Kotak, IndusInd Bank were all lower. Auto stocks also did see some profit taking. So names like Eicher Motors, Maruti and Tata Motors were down. Some stocks managed to gain today. ONGC clearly was on the beneficiary side today. So that did well. Dr. Reddy's Pharma has been doing well of late, and Coal India was higher. But really, the last hour of trade belonged to the Adani Group stocks on the downside, led by Adani Enterprises, which of course is the latest entrant in the Nifty, Adani Ports as well, and the others, Adani Green, Total, Transmission, Power, Wilmar, even Ambuja if you want to include that. So all these stocks had a bit of a collapse in the last hour of trade. All said and done, this is a market which is still trying to find its feet because it's still hostage to what's happening in terms of global cues. Let's see whether the market can move on from here in terms of some recovery tomorrow.
Anuj, many thanks for joining us. That was the stock market action. But in the currency market, the rupee weakened against the dollar today, and it weakened by more than 50 paise as the dollar gained strength in trade. Now, $1 US is almost worth 82 rupees. Strong dollar has been rattling currencies around the world, and the rupee though has performed relatively better compared to its peers, but today almost at 82 to the dollar. That's the dollar rupee for you. Now, here's another reason why the Lal Street may have come under pressure. Crude oil prices starting to rise once again. Both Brent and NYMEX are up over 4% as OPEC nations consider another cut to production. On Wednesday, OPEC will mull cutting output by 1 million barrels a day, and this is driving oil prices higher across the world, so that's a cause of worry. But the big story today, just 24 hours ago, British Prime Minister Liz Truss said that she was absolutely committed to the proposed tax cuts. But today, a U-turn. The British government has reversed its decision to cut the topmost tax rate from 45% to 40%. And this move comes after widespread backlash and market turmoil. The International Monetary Fund had warned that the tax cuts will, in fact, increase inequality. Arabelle joins us now with more. A big U-turn by the UK government on the tax front, Arabelle.
Still a few more questions around what exactly they do plan to do. What is the Office for Budget Responsibility also then put out? Of course, there were questions around the permanent secretary then in Treasury also being laid off, of course, in and around when that mini budget was put forward. Did that mean anything? He did say that it didn't and had nothing to do with the mini budget as well. But a few elements of this mini budget which has come to the fore, including that energy price cap, which have impacted the market quite heavily. Yes, we may get a sense of stability, but his biggest public address then will, since that mini budget, the first one since that, will be later today. And perhaps the key sentiment from that will be the need to ensure that markets understand exactly where he plans to go when it comes to the budgetary requirements and what else is needed then in order to get his party behind himself, as well as Liz Truss, get perhaps a fresh mandate.
Arabelle, many thanks for joining us. That is the big story, the big U-turn by the UK government. Now, the other big international story that we're tracking, shares of Swiss lender Credit Suisse plunged across global markets amidst rising concerns over its deteriorating financial health. The stock tanked even after the CEO reassured clients and employees about the liquidity and financial position. Now, the bank's credit default swaps price has jumped to its highest level, rising to 293 basis points from 55 basis points at the start of the year. Leslie joins us now with more. Leslie, all eyes on CSFB.
The rumor mill kicked off in earnest with a report about a week and a half ago saying the firm was sounding out investors about a capital raise. That news, although disputed by sources close to the firm, sent the stock to a record low, and it's fallen almost every day since, now significantly lower than $4 a share. The firm sent out a press release a week ago saying it's on track with asset sales and divestitures, which would help raise cash without diluting shareholders. On Friday, CEO Ulrich Korner sent out an internal memo obtained by CNBC where he tried to comfort employees and amid a slumping stock price and, quote, uncertainty and speculation. He said, quote, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. So is Credit Suisse having its Lehman moment? Well, Credit Suisse's common equity Tier 1 ratio at the end of Q2 was 13.5%. That's higher than most U.S. banking peers. I'm told there's genuine interest in its securitized product unit, which could shore up some capital. However, the firm is sitting on hundreds of millions of dollars in losses from leveraged buyout-related debt that the market won't absorb amid this current risk-off sentiment. And it's impossible from the outside to get a minute-by-minute account of the true picture of risk on its balance sheets.
Leslie, many thanks for joining us. Credit Suisse under pressure. Back home, a quick check of some of the other stories that we are tracking. The insurance regulator could cap management expenses at 35% of gross written premiums for health insurers in a given year. Sources say that no cap would be imposed on commission limit for health insurance policies as long as it stays below 30%. India's factory growth shrank to a 3-month low in September but remained in expansion territory. The S&P Global India Manufacturing PMI coming in at 55.1. The S&P report stated that manufacturing PMI was in expansion for the 15th month. A reading above 50 indicates expansion. Now, Netherlands-based investment group Proces, that is the parent company of PayU Payments, has terminated its agreement to acquire Indian payment aggregator BillDesk. In a statement, Proces said that certain conditions were not fulfilled by the 30th of September, which was the long stop date, and the agreement has been terminated automatically in accordance with its terms. The South African MNC Naspers owns a majority stake in Proces. The deal would have been the second largest in India's internet economy after Walmart's $16 billion acquisition of Flipkart. The deal would have created the country's largest online payment entity. Remember, a $4.7 billion deal, which is now off the table. The big development on the privatization and asset monetization front. The union government will invite expressions of interest for IDBI Bank's privatization by the 15th of month. That is what we're given to understand. That's not all. Hotel Ashok's monetization will come up for cabinet approval soon. Sapna Das joins us now with more on both these exclusive stories. Sapna.
Well, first of all, on IDBI Bank stake sale, we are given to understand that the government will definitely be in a position to invite the EUIs for the bank stake sale by October 15. In fact, the expectation has been that they could be ready at least this week itself. However, if not this week, then by October 15, definitely the EUIs for IDBI Bank stake sale will be in. That's one. Second, importantly enough, on Hotel Ashok, we are given to understand that maybe the government would be in a position to make a presentation to the core group of secretaries as far as the monetization plan is concerned. Once that is done, the work on the cabinet vote will start. So maybe by around December odd, November, December odd, before the calendar year ends, maybe the cabinet approval will be in for Hotel Ashok's monetization plan. We are also given to understand that the number of entities has grown substantially. 22 odd entities were there earlier who had shown interest in Hotel Ashok's roadshow. We are given to understand the number now stands at 30 odd plus, and it includes big players like ITC and HAT, apart from the names which are already doing the rounds. But significantly enough, we are also given to understand that the timelines for completion of Hotel Ashok's monetization are pretty tight, in the sense that they will not be. This monetization plan is not really going to take off in a big way till India's G20 presidency is over, because at that point in time, India is going to require all of its iconic hotels to be ready and available for foreign dignitaries. So, keeping all of this in mind, it just could be possible that the actual handover of the Hotel Ashok could start after the G20 presidency is over sometime next year. This is what we are given to understand. But in the meanwhile, the government is going to keep its entire plan ready in terms of not just the CGD presentation, but also in terms of the cabinet approval and what shape and form this is going to take place.
Sapna, many thanks for joining us. Kirit Parikh, the head of the government-appointed panel tasked with reviewing the pricing formula of domestic natural gas, told CNBC-TV18 that India may have to cut down on gas consumption if LNG prices see a sharp spike. He said that the price of gas for fertilizer companies will be prioritized for allocation. The government has hiked the price of natural gas by 40% to a record high on Friday.
Many import of LNG taking place in the country is based on a long-term contract. And the average price of imports in India is substantially below what the spot prices in international market is. And obviously, if the international market prices go up, then we have to decrease the consumption of this, reduce the consumption, because you cannot expect the government, that is people, the general public, bear the cost of this price for few who use this gas.
That's a CNBC-TV18 exclusive with Kirit Parikh. Passenger vehicle makers have seen strong sales for the month of September. M&M, Tata Motors and Maruti registering sales growth between 85 to 129% on a year-on-year basis. Two-wheeler exports continue to remain under pressure. The farm equipment segment has witnessed a sharp improvement. So that's the auto data for you. But yet another fatal incident involving an electric vehicle fire. A 7-year-old boy died after an e-scooter allegedly exploded while charging in Vasai on the outskirts of Mumbai. Police say the battery was removed from the scooter for overnight charging, resulting in overheating and a short circuit, which led to an explosion. The e-scooter belonged to a company called Battery. That is BATTRE, Electric Mobility. It is a Rajasthan-based company, is what we're given to understand. Corporate India loses one of its pioneers of renewable energy. Tulsi Tanti, the founder, chairman and managing director and one of the promoters of Suzlon Energy, died after suffering a cardiac arrest. The company in a statement said that Tanti was on his way home in Pune after concluding a series of meetings in Ahmedabad about Suzlon's ongoing 12 billion rupee rights issue. Shares of e-commerce platform Nykaa surged in trade today after the company said that its board had approved the issuance of bonus equity shares of the company. Eligible shareholders will get 5 bonus shares for every share they hold, eligible members to be determined on the 3rd of November. Chinese smartphone maker Xiaomi said it was disappointed with the competent authorities' order allowing the Enforcement Directorate to freeze assets worth over 5,500 crores. The company says that 84% of the amount seized was royalty payments to Qualcomm for tech without which their tech wouldn't work in India. The mobile manufacturer also maintained that oil royalty payments were made through RBI-approved channels. And here's a CNBC-TV18 exclusive. The Customs Department is looking into tax evasion by some Indian companies for allegedly importing goods from China and not paying the applicable tax by gaming the rules and misusing the FTA route. Timsy standing by with more. Timsy, what more has the Customs Department found?
Well, in yet another crackdown on imports from China, Finance Ministry is keeping a close watch at importers gaming rules of origin norms, misusing FTA route where India is in concessional duty agreement with Southeast Asian countries, routing their imports from China via these FTA routes to evade duties. Keeping a close watch at such imports, Customs Department is yet again planning to resume intense physical inspection of all consignments imported from China, Vietnam, Indonesia, Taiwan, etc. amid large-scale dumping and duty evasion. Recent internal analysis of Customs Department highlights that importers are getting in finished goods in the garb of raw material and intermediaries, violating norms, getting concessional duty access to the country without any value addition. Major product categories seen violating these norms includes garments, plastic products, suitcases, handbags, furniture, household items, cosmetic items, electronic goods, mechanical and electrical products, mobile phones, laptops, etc. And important to note here is that India's imports from China alone have surged 34% to over $78.5 billion during January to April this year, and despite the fact that a lot of major imports are coming via other routes as well. So let's see how soon Customs Department takes some serious action. Back to you.
Timsy, many thanks for joining us. We will take a break, but up next, Ukraine's President Zelensky says troops are making more gains in Russian-occupied Kherson. That and more when we return. On to the big global story today. Ukraine continues to reclaim more territories. President Zelensky has declared the eastern town of Lyman as fully cleared of Russian forces. Russia was using the city as a transport and logistics hub. Recapture of this town is a major blow for Russian President Vladimir Putin following his annexation of key Ukrainian regions. NATO Secretary General said this victory demonstrates Ukraine's capability to ward off Russian troops and the impact of advanced Western weapons on the conflict. Our colleague Sanjay Suri gets us ground reports from Ukraine, giving stock of the damage, the destruction and the efforts to restart life amidst the ongoing war. Here's Sanjay's report from the city of Kharkiv.
The destruction of Kharkiv that we see all around us, and there is a great deal to see, goes beyond immediate destruction of infrastructure. So far as that goes, the cost of rebuilding is going to be gigantic. It will run into many billions of dollars, and no one has figured out an estimate yet. There is too much to count, and because destruction is ongoing. But the greater cost by far will be the long-term damage to the economy. Just look at so many of the targets. The Russians have repeatedly hit lifestyle businesses. Consider what was and what should have continued and what is left. Restaurants are closed, and restaurants are such a vivid measure of confidence in an economy. To just step out and have a meal out, shopping centers are deserted, the city itself is deserted. People don't come in to buy, the business closes down, the jobs at the business go, the business of production, of supply, transportation, advertising, all goes down with it. The metro here has been made free to encourage people to go and spend some money somewhere. But as a border city, bombed like none other, the long-term hit on Kharkiv is going to be very much greater than for many other places in Ukraine. By local estimates, Russia was between a quarter and a third of the market for all produce in Kharkiv. But it's more than the Russian market that Kharkiv is losing. The Russians are making sure of that. is going to take only the occasional missile to kill any confidence that could bring business back. When we bring reports such as this, we do always look to bring an expert to present the voice of someone who knows very much more than we chaps in the media possibly could. We can't do that here. There is no one around. That kind of analysis is for normal times, not for times like this, not in Kharkiv. Maybe we don't even need a lot of analysis here. Just the sight of the city and what's left of it speaks for itself.
A city deserted, that's Kharkiv. Our colleague Sanjay Suri reporting from there. And before we wrap, let's talk about protein. It is the latest food fad and it's become the hottest selling point for everything from breakfast bars to even idli and dosa batter. Shilpa Ranipeta reports that FMCG companies are certain that it's more than just a passing fancy and are jumping onto the protein bandwagon. Take a look.
First, fitness was all about sugar-free. Then it was fat-free and oil-free. Then it was low-carb, and after that, gluten-free. And now, it's all about protein-rich. The Indian Council of Medical Research recommends that an average adult consume 0.8 to 1 gram of protein per kilo of their body weight daily. And in the aftermath of the COVID-19 pandemic, health-conscious Indians are increasingly looking to include protein in their diet.
Literally, I would say protein category would have grown literally 2.5 to 3x on our platform in last 2 to 3, pre-COVID versus now overall. So there's a significant scale up and this is led by more and more new consumers sort of adopting protein products. So protein, what used to be more confined to gym usage, has definitely moved to mainstream consumers.
The health foods industry estimates that India's 3,000 to 4,000 crore rupee protein market will grow 15 to 20% over the next few years. And that's a number that's making heads turn.
So estimates suggest that the protein market is about 3,000 crores, the protein supplements markets, and that is slated to grow about 15 to 20% over the next few years. Within that, plant protein, which is where we're entering with GoFit, that is a smaller segment. So it's about 500 odd, but it's nascent and faster growing.
The food fad is no longer just eggs or paneer or chicken or protein shakes. With established FMCG players ramping up their presence and offerings, the market is being flooded with high-protein snacks and beverages, from chips to chocolates, from coffee to sodas to biscuits and buttermilk. Even niche players like Muscle Blaze, Oziva and MyProtein want to taste, and more are queuing up.
We are coming here with an intent of playing the full hog. So today we have two brands. We have Saffola at one end, which through meal maker Soya Chunk is talking to the mass of India, is available in the basic format in which it gets consumed in the center of the plate, and is actually made available to you next door at a price point of ₹10. For people who are discerning, who are health conscious, they are looking for products which can add different nutrition in different formats. We have created this brand called Fitify.
But getting the pricing right is just one challenge.
A big hurdle, the industry says, that there is still some discomfort in taking proactive nutrition. The other is that there is a lot of misinformation around consuming protein supplements. But the pricing, companies say, will not be a problem as the movement picks up steam. And with innovation and consumer education, healthy profits are on the cards. In Mumbai, Shilpa Ranipeta.
And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned to CNBC-TV18. The news continues when we return.